Well, banks have been quick to respond to Monday's meeting with Finance Minister Pravin Gordhan and the National Treasury, saying they've been proactive in trimming fees and making them more transparent in order to benefit consumers. So is banking becoming cheaper and easier for South Africans? Well, that's what I'm asking Mike Kann from thinkmoney.co.za. Mike, thanks for coming in today.
Thank you.
Is banking becoming cheaper and easier and more convenient?
So I would answer that probably in two ways. I'd say yes, but not because of the actions by the big banks. I'd say more because of the entrance of newer players. So I would say that the entrance of players such as Capitec or Bidvest Bank with far cheaper banking options have contributed. So there is some increased competition. That said, I think that the results of the Competitions Commission and banks looking to be more transparent about their bank charges and look to reduce those, I would argue that they haven't been that proactive about doing that, or at least they've been proactive about just sort of disrailing and distracting the process and actually not really offering any end benefit to the consumer.
Of course, we had that Competition Commission inquiry, which was about 3 years ago.
Correct.
We had the results out about a year later. It's been a long, slow ride, which you would expect, I suppose, because it is quite a complicated sector. Lots of the banks, though, have said they've brought down charges for debit orders that bounce, and they can illustrate how those have been brought down. Do you think they're perhaps just making those fees up in other ways?
Well, I definitely think that. So for starters, I think one of the shortcomings of the Competitions Commission was there was a strong focus on fees, but in banks, there are two parts to your charge. There's the fees and there's the interest. And I think that what's happened over the past 2 or 3 years is that as the fees have become more transparent, the interest rates have become more opaque. So they're just really shifting where they're hiding their charges, as it were. And so I think they have been very proactive in reducing fees and making fees more transparent. So I'll definitely say that has happened. But like I say, the whole story is far more complex, and I think where they've kind of given a bit on one end, they've taken a bit away on the other end. So I don't think the picture has become much clearer at all for consumers out there.
Of course, it is very difficult to compare over the past couple of years because we have gone through the financial sector crisis. We have seen interest rates rising sharply and then coming down quite sharply again. And due to the risks involved for banks, some customers have had to be charged more above prime than they would have previously.
Correct, and I think that's always going to be the case. I think we at Think Money are very supportive of things like risk-based pricing because that enables certain consumers that were previously, say, disadvantaged or not privileged enough to gain access to credit. Now they can. That said, they're international models used in most developed nations, which enable comparison of interest rates even while enabling risk-based pricing. Very standard off-the-shelf stuff. It's even stuff that we've recommended to both the Banking Association and the National Treasury. But I haven't seen anything happen really.
Well, there is the Banking Code of Practice, and that's going to, when that's fully implemented, it's going to include a switching code for customers moving banks, also standardizing pricing terminology, so it becomes easier to compare what you're getting across different banks, because of course, as you say, fees are stuck in different places. I mean, would you welcome this? Do you think it's going to make it easier for customers?
I think that will make it a lot easier for starters. So I think that even right now, through the service that we provide through Think Money, we enable people to compare banking products and see which product is cheaper. But that's really only the first step. The next step is actually switching accounts. And to be honest, that's where 90 to 95% of consumers fall off the process, because the process right now is just so complex. So to have some type of switching code, similar to how you port a cell phone network, I think
which isn't that easy either.
Which isn't that easy, but it's a start. So I think that's the step in the right direction. But again, with regards to standardizing terminologies, again, I still feel that it's all been focused on fees, and there's been no focus on interest. So to a large extent, I would argue that it's relatively pointless unless it's all made publicly available and all made.
Well, we did have the previous Reserve Bank Governor Tito Mboweni taking the banks to task for being uncompetitive on their interest rate pricing, and of course because the prime rate is stuck at a certain level, which is currently I think 10%. But I mean, can you really compare interest rates if everybody's charging prime? Because nobody really charges prime anyway. You get charged a percent less than prime or more than prime, don't you?
Well, look, I think you definitely can. So for instance, if I knew, just to use as an example, I knew on average ABSA was offering prime +1 on their home loans, and Standard Bank was offering prime +2.
But then again, you have to bring in the risk-based pricing, don't you?
Well, but still, if you use something like an average, or what they use in developed markets, they use a thing called a typical interest rate, which represents the interest rate that the majority of people get. It's a way of equating. So you might still actually get a better rate at one or the other bank, but the chances are you'll get a better rate at the one with the cheaper average rate, or rate on average, if that kind of makes sense. So there are ways that you can compare. Like I say, in developed regions, look at the UK, the States, almost all across Europe, that is the standard way that products are compared. So it's sort of done and proven.
Of course,
it works.
Also their banks are in big trouble at the moment, aren't they?
No, sure, certainly. I think I don't want to take away from the fact that banks need to make a profit. We also run a business, and I also understand that you've got to make a profit at the end of the day. That's the whole point of business.
You also have to fill a public service.
I think so. I think that there's nothing wrong with making money. Just all we're saying is just be transparent, just be open, and just enable an efficiently competitive market where people really can choose and really can switch if they aren't happy.
But then, of course, you did mention Capitec and Bidvest Bank, so we do have smaller players coming in, undercutting some of the big players. So the landscape is becoming a little more competitive, isn't it?
Absolutely, and we're completely supportive of those. I mean, I actually bank with both those banks now, and it wasn't an easy switch, but I'm kind of glad I've done it now, and I personally save a lot of money, and I'll endorse that move for anyone out there.
Mike, we have to leave it there, I'm afraid, but thanks very much for coming in today.
Sure.